Cheers, traders. Raghee here, and I wanted to talk today about this concept of buying the dip. We hear that being thrown about a lot in financial media, the financial landscape, this idea of buying the dips, and it's sometimes maligned, it's sometimes recommended. What is it? How do you do it? And when do you do it? And that's what I wanted to cover here today, because more so than ever now, you're going to probably hear a lot of mocking of the buying of the dips, especially as it applies to the Dow on a day where the market was flirting with, trying to close down over 200 points. In fact, we ended up closing down 195, so a heck of a sell-off. Now, this idea that traders should buy the dips in the Dow, and by the way, I might be talking about equities right now, but it doesn't matter. In fact, in a lot of ways, if you want to just forget the symbol in the upper left-hand corner of this chart, it doesn't matter what this is. It doesn't matter if it's cocoa or coffee or anything, Apple, the Dow, the Russell, it doesn't matter. What we're studying here is price action and the psychology that's reflected in the price action. So the Dow is probably a good example, especially on a day like today's where the Dow is going to be talked about a lot. Buying the dips means, dips is just another way of saying correction or retracement. Buying the dips in a market that has what I call a bullish bias. In other words, most people are looking to buy the Dow. They're looking to buy stocks. There's a bias to being on the long side in this market. And that's really something that's pretty unique to equities, somewhat in commodities, and there really isn't a bias in that regard in Forex. Not really, not in the way it is in equities. So buy the dips. Now, this could be also on the flip side, sell the rallies. Same psychology. Buy the dips is an uptrending type strategy or mindset, while selling into rallies or selling strength is more of a downtrending strategy. So a dip is basically a correction or a retracement. But corrections and retracements really are best applied. I won't say only, although I kind of feel it is only, but they're best applied when the market is trending. Now, you can have a trending market across more than one time frame. A 5-minute trader of the Dow today would probably say, yeah, today's a sell the rallies kind of day, sell into strength, if you're looking and living the market through the 5-minute time frame. If you're looking at a daily time frame, there is no trend. And this is where I'll say, and this is obviously my opinion, that's what I share here in these videos, but the market's chopping. There are no dips to say there are no retracements, because to me, again, the term correction or retracement really is most effectively and to me most applicable within the context of a trend. This market hasn't been trending since arguably late February, most definitely early March. This is a distribution market trend in the way of, say, Charles Dow's definition in terms of market trend psychology, and that is, this is the end of an uptrend. In fact, we've basically gone from one ugly distribution back here from late November to early February. We actually did have another push, a very short-term uptrend, and then we went right back into distribution. And the reason I can define these, or how I define these, is based upon my wave and my grab candles, my 34 EMA wave and grab candles. So first of all, no matter what opinions you kind of came into this video with, if you could for just the next few minutes, buy into the notion that buying the dips or selling into rallies is a trend following type strategy. Now, I believe there is an opportunity to buy the dips on the Dow, and that is based upon the market trend of the weekly. You take a look at this weekly here, and I'll show you a few examples. Buying the dips on a day like today, we're not quite there, but we're awful close. So what I like to do, and I talked about this in detail in the premium video, when we've been talking about it quite a bit in the morning chats, which is a lot of my now preference for some of these weekly time frames as we lose the clarity and directional bias of the dailies. In other words, most daily time frames, especially in the Forex market, simply are not trending anymore. They've transitioned out of their prior up or down trends. And the dollar being one of the major ones, the dollar index. But what's happening now, for example, here in the Dow, is I do have an uptrend. an intact uptrend, consistent green grab candles, and a 12 to 2 o'clock angle of the wave. On a pullback, sure, I could buy Dow futures or DIA, the ETF, the diamonds, or I could buy call options. And what I want to do is buy those call options, preferably on a down day when the market sinks into the range between 17,635 and 17,465. So that would be a trend follow. But rather than buying DIA or Dow futures, I will buy calls. 18,000 strikes, actually. I'll buy calls in the Dow. And I've been doing this now a number of times throughout the last year and a half. In fact, pretty much every time the market sunk into the wave, as you can see here, I was looking for calls, looking to get long through a call option. So where are there some other opportunities in terms of this buying the dips or selling into the rallies? Another place I'm doing this is actually British pound futures. I've been doing this for a couple of days, and I got a little bit of a payoff today with the pound weakness. There's no trend on the daily. Some traders might say this is an early look at an uptrend. I think there's still another fatigue point waiting at about 15, well actually I should say 55.50, 1.5550. There's one more fatigue point in that area, basically between, I'd say 54.80 and 55.50. But what I do believe that we're seeing in terms of the rally on the weekly is a correction. So this is still a dip mentality, but really what this is a bounce. So buy the dips would apply to the weekly Dow, sell the bounce, short the bounce would be applied to the BP futures. Let's use another example here. So again, what I'm doing is I'm realizing, hey, there isn't a trend on the daily any longer, not the uptrend, for example, that we saw on the Dow. What I'm seeing now is a transition from the 12 to 2 o'clock angle of my wave to green, blue, and red grab candles, to what, this is obviously a lot of bearish sentiment and momentum, but it hasn't organized long enough on the daily time frame to really now manifest into a downtrend. But we're definitely seeing weakness, and the market's in flux. A broken uptrend is not immediately a downtrend. And I do think, based upon the Fed wick from March the 18th, and some of these previous breadcrumb lows, we could be at another fatigue point, another exhaustion point, could be a floor in this area. What we also have is the market pulling back into the 20 period simple moving average on the weekly and approaching the other trigger that I like for a more conservative call buying type approach, closing in on 93.50, and essentially between where we are now, and I already started this at 95.60, I'm buying the dip in the dollar, not on the daily, but on the weekly. So these are some of the strategies that are very much in line with the way that I trade Forex, with the way that I trade futures. In fact, premium members, I talked about what I'm doing in gold right now with some options. And this is how I can position myself as predominantly what I am wired to be, which is a trend follower, a longer term trend follower. So I think a couple things as a takeaway here. Understand what buying the dip is, corrections, retracements. Understand if you're buying a dip in an uptrend or selling or shorting into a bounce in a downtrend. Understand you need the trend for that strategy to be valid. You need to be able to define what that bounce, retracement, dip actually is. It needs to be a measured way of saying, okay, this is actually not just a down day or an up day, but actually a retracement. And then you need to figure out, well, which time frame am I trading? And as far as what I want to share here with you guys, I think the best thing you can do if you're looking at trying to learn from somebody or trying to pick up habits and strategies from somebody is know what kind of trader they are. While I do like to day trade, and we're going to be doing that a little bit more often now because of the flux in the market, I like longer term trading. I think the risks and rewards are greater, but it's the way I'm wired. I do like to trend follow. I do like to longer term trend follow. So I think it's always important to understand what kind of wiring your coach, teacher, mentor, whatever you want to call it, actually likes, so you know what you're getting into. So we're going to do a little bit of day trading, trend following day trading, by the way. Shocking, right? That's just the way I'm wired. I like to find the organization in the market and take advantage of that psychology. Trending psychology is some of the most predictable market psychology out there. So again, buying the dip, selling the rally, understand the underlying trend, and realize you can do that on any time frame. I think the most powerful time frames are typically the longer term time frames, and that's what I'm actually doing now, shifting to some of these longer term weeklies and try to take advantage of those, buy the dip or sell the rally opportunities.